Been a while since I posted one of these videos, but obviously with everything going on, uh, clearly totally insane week in the markets. In fact, several weeks in the markets. Thought it might be a good idea um, to post one tonight, and the reason really is I wanted to talk about a couple of things. I mean, number one, I want to talk about liquidity, but I also want to talk about this 2350 level that I had talked about quite a bit this week. And we can look at just the technicals and why it's an important level and where we did in fact close. As you can see here in the chart, we did close obviously below 2350, which is concerning to me. It looks like we've established this new 2270 level on the S&P. But before I get into that, I first want to talk about liquidity. I think there's a real misconception about what the Fed is doing with regard to the repo program and liquidity, and even just you know investors like myself and a lot of the FinTwit folks. We're providing liquidity to the market by obviously buying risk assets. It's really important to understand there's somebody on the other side of every single trade that you make, and with the Fed stepping in as kind of a buyer of last resort, it's not a bailout per se. They're expanding their balance sheet, obviously, and absorbing these risk assets because people want out and they want cash, and that's what liquidity is. So it's very important that the market operates efficiently and that there is price discovery in those times of uncertainty and somewhat panic, and so that's what the Fed is doing. So I want to be very clear about what the Fed's doing, and I think it's really a very positive thing. And I think Powell and the FOMC as a whole have done a really good job navigating through this. So I wanted to make that point. But let's get to some of these technicals. And you guys see me post this chart all the time. This is my this is an ES chart, so this is basically the S&P futures. It obviously tracks the S&P through the trading day, but it also tracks the overnight market as well, which is really critical. And so you'll see all of these various levels that I've put in here over time, and they're all meaningful. We've either consolidated at these points, or we've found them to be support levels or resistance levels. And right now, as you can see when we zoom in, this 2350 level that was so critical, we've lost, and we lost it pretty heavily into close. Now, you'll remember I talked about the fact that today was an options expiration Friday. That's so important because you got to understand there's a lot of implied volatility baked into that because you have options expiration. So investors are essentially forced to either cover if they're short, which in which case you normally see the market squeeze higher, or you're seeing these things just die and limp into close like we did today, which is really troubling. So as you can see, this blue line here is the 200. This is a 30-minute chart. I'm sorry, no, we're on a 1-hour chart right now. So this would be a 200 simple moving average, and you can see we're well below that moving average. In fact, let me go. I'm generally on a 30-minute chart, so let's look at the 30-minute chart. I think it's a little bit more helpful. But you can see we've established this new level right here, which is that 2270. So we're going to see if we can't hold that through the weekend. Now we're going to see some bad headlines. I think psychologically we're going to have some challenges. As confirmed cases ramp up and so forth. So I think we'll see some more weakness into next week. The question is does this new level hold? And I'm just not 100% sure it does. In fact, there was just somebody on Twitter about an hour ago chatting with me about this, and they felt we could see 2,000, even as far down as maybe 1,500 on the S&P, which would just be staggering, just staggering. So to give you a sense, I mean, this is the ES chart. We probably go here to the SPX and just look at this this fucking staggering drawdown. I mean, what are we looking at here? This has got to be about a 30% drawdown from top down here to bottom. It's about a 30% drawdown in a matter of, what are we talking about here? This is February 19th. This was a February 21st was the last which is right here. This was the last, in fact, options expiration Friday, and we saw a very similar close. It was really brutal. But yeah, from peak to trough right now, we're about 30 points. So that's just a staggering move. And so when we think about the S&P, we want to be thinking about these levels. And again, 2350 not holding is really concerning. But as you can see right here, let me just go ahead and put this level in on this chart since I don't have it in, which is right here at this, let's just call this one, this is 2280 roughly. Let's just call it 2280. Sorry, I'm doing this in real time with you guys. But that's gonna set up and really want to see that hold. Obviously, I mean this again, just zooming out and thinking about how breathtaking this move is. I mean, we're seeing 6, 8, 10% moves in a given day, and you can compare that up to these levels here, where you're moving maybe a half a point a day. Really orderly market, and then just the bottoms falling out. So the question is, how far do we fall? Can we find a bottom into next week? I think we can, and I want to try to keep you guys as close to this as possible, and like I said, hopefully give you a little bit of sense of just what to expect and what to think about in terms of the technicals. If there's any specific names, like any of you guys want me to touch on, I'm happy to do that. One of the other metrics I've obviously been focused on is, well, two things. Number one is the 2s and 10s spread, which is a yield curve inversion, which would be, in fact, that's just 2-year yield. So let's look at 2s, 10s. I think that's going to be this chart here. Yeah, so this is the 2s, 10s spread. As you can see, we just nipped under it back here in August, and they say that this is generally a forward-looking recession indicator. We've obviously steepened the curve substantially here, which is really, to me, a good sign. We're looking at 10-year yield. You guys have heard me talk about 10-year yield a lot. This is really a risk barometer, and today was not helpful. You can see we ramped up. We were well over a point, and now we've given a lot of that back. And you can see I put the marker in here from when the Fed basically just made the emergency cut to go to zero. So this is really a nice risk barometer, something to keep in mind. Normally when I've done these in the past, I've gotten into specific names, and it's just, I don't even think it's really meaningful right now to even talk about specific names, right? Because things are just so bizarre and so stochastic. So, but I'll try to post more of these videos in the coming days and weeks if they're helpful for you guys. And again, if you guys might have certain questions that I could potentially address in some of these videos. It's a lot easier to do this, right, than try to type out a fucking dissertation on Twitter. So. Anyway, look, everybody have a great weekend. Stay safe out there, and we'll get back at this thing come Sunday night when futures open at 6 p.m. Eastern. So